Yo, what's up, everyone? It's your boy Looney back with another market breakdown. And once again, this one is rough. The markets are bleeding, portfolios are down across the board, and mine is no exception. Before we get into it, real quick, I run a free Discord community, and then I also have a premium version where I break down my trades in real time, do coaching, there's a course, giveaways, and live calls. All links are in the description. Let's get into it. So as of today, April 16th, we are seeing the aftermath of all the news, tariff news, back and forth. There's more coming out of what actually is the tariffs, because today we heard it was 245% on China, but once again, that was already news, or that was already known. It was just worded differently. So we're just getting more clarity on how these tariffs are working. And then also Jerome Powell spoke today, and he pretty much broke it down that the stock market and the economy are separate entities. And although they intertwine, just because the stocks are not doing good, that doesn't mean that Jerome Powell is looking to step in to pump your stocks. He's really focusing on the economic side and how the economy is doing. So he disclosed that the economy isn't in as much struggle as a lot are fearing. And he did say there is a lot of volatility, and there will be continued volatility as we move on. So because of that uncertainty, the market reacted. So big names like Apple, Nvidia especially, they were banned from selling H2O or H20 chips, sending them to China. So they took a dip. AMD as well, that's one that I'm invested in. And Tesla, always getting dragged down with these. So the market's down. And even the so-called safe ETFs like SPY and QQQ are deep in the red. Crypto, on the other hand, is actually green for me, and Bitcoin is green. So still a little shaky, but nothing really feels safe right now. So I'm going to give you guys the real breakdown of how my portfolio is doing and how my portfolio is hurting. So I am down 1.68% on the day, not that much of a concern. On the week, down almost 3.5%. On the month, 7%. 3 months, 22%, and year-to-date, 20%. So I'm still hanging on, but barely. You could see my amounts are taking a hit. My portfolio is taking a massive hit, and my stocks are dipping with this volatility. And this isn't just a simple paper cut. This is a full-on bleed. But again, I'm not panicking. I do actually have a plan, although of this shaky volatility. And here's how I'm hedging and staying in the game. One is I am selling covered calls constantly. So I currently have about 300 shares of SoFi, 800 shares of Riot, and 200 shares of Mara. So rather than just letting them sit and bleed, I'm selling covered calls, generating passive income, and it actually slightly reduces my cost basis if I decide to reinvest those premiums into those stocks. So although these are very small premiums, because the price are dipping and the trajectory is heading downward, it is still something. So I'm earning $12 on this on the week, and this is a short week, so the premiums aren't as big. And if we actually look on my options, go to realized profit on the week, I'm up 20%. So a lot of these are going to expire worthless on the call side. I do have a few puts. This one actually should expire worthless unless SoFi takes a massive drop to $8 and we see more volatility. And I'm probably going to get a sign on my other sell puts. The 10.5 is very interesting because I'm very close to that. I actually want to get assigned at 10.5. $11 seems like I'm getting hit with that one because it expires tomorrow on a Thursday. We are off Friday. So even something like this, I am generating income. This Neo calls, I am looking to generate $20 of value. So although you get the premium up front, it takes time. And that's why time is on your friend when selling options. It takes time to actually appreciate to that value. Because if you guys don't know, to close a sell option, you actually need to buy it back. So if you wait till expiration, it should essentially be $0 and you'll buy it back for $0. So there are some costs. There's like small fees, like 4 cents to close it. So there is that. But that's why I'm just letting it expire. I'm just letting these expire and appreciating value. So $10, and I still get to collect an extra $2, and then I get to do it again. So next week I am going to do the same strategy on those same stocks, change up expirations, and possibly roll, because we are going to see a correction or a change in direction where stocks are heading upwards. And with covered calls, you actually miss out on that and you suffer opportunity costs. So knowing how to roll is actually very important for those kind of scenarios. And number two, I actually went over this, that is selling puts. So on days when volatility spikes and premiums are actually a lot juicier when you're on a red day, I've been selling cash secured puts. That's how I got this $8 SoFi put, because I captured SoFi at a super low price and I'm selling them way out of the money. I'm going a lot less risky with 20 to 30 delta, safe entries, and mostly stocks I already own or want to own. And if I do get the stocks, I get assigned at a discount. And number three is combining these two, and that's dollar cost averaging. I'm putting money into long-term positions. For example, Sony, I'm trying to build my position because this stock is a relatively safe stock, and I'm putting $6 a day and hopefully getting 100 shares, and then I can run covered calls again, generating even more income. And then crypto, I'm just constantly buying every day, $3 a day into Bitcoin and other cryptos. So building that portfolio, I'm looking to get this one to 10K of investments. And at one point I was actually up to 13K, but overall I want to be invested around that 10K. So putting a little bit every day. And the fourth one is I'm avoiding overexposure. So Riot actually is bleeding significantly. It is down 30% on my portfolio, and it takes up around 17% of my portfolio. So that's a little too much for what I'd like to see. So I'm looking to get into other stocks just so my portfolio is more diverse. And perhaps I will get more into Riot once I get my diversity down on this position, because I don't want to overexpose, especially because I own crypto. And this is more of just a hedge, or just keep things in control of things and just managing my emotions. And one I don't really talk about is building my cash position, because on these volatile days, it might not be the worst to come. There might be worse. There might be a recession, and that's why having cash on the side is actually really important for scenarios like this. And you can use your judgment on VIX and just your overall research, but I like to pay attention to VIX when putting cash in or not. And I got a little greedy. I put more cash than I should have into a lot of positions and not really paying attention to volatility. So when volatility is lower, it's better off to just sit in cash and just wait for a better entry. And then when VIX is all-time high, it's very rare you're going to get a better entry than that moment. So although red days are tough, this is where long-term wealth actually gets built. I'm not trying to time the bottom. That's why I'm selling puts constantly, because I'm prepared for the stock to go even lower. I'm just showing up, staying consistent, and managing risk one trade at a time. And drop a comment below. Are you hedging? Are you buying? Or are you sitting in cash? Like, subscribe. And if you want my real-time trades and updates, check out the Discord. Until next time, peace.